All right. First things first, we're looking at the NQ chart we've been tracking. And this will continue to be an important chart because from here, we are looking at the possibility that a low is in. And today we are pulling back, which we're going to look at the triple Qs today. But more importantly on NQ, I want to watch this April low very closely because if this low holds and we do get some kind of bounce off of here, even though we are starting to pull back, if we do not actually come down and break this low, it may be possible that a bottom is in. And from today's close, we will need to drop about another 3.5% to get that breakdown. So that is currently the risk to the downside. And if you're bearish from today's close, we have risk to the upside of over 6%. So there is risk reward that favors buyers of this zone because the reward to the upside will be that breakdown retest and the risk to the downside is lower than the reward. So that is a bigger picture look at the NQ that I want you to be aware of because that will be important to understand. And today I do think will be a very important pivot in the indices on how we gap up or down tomorrow morning is going to be very important for sentiment. So first we'll jump over to SPY, and today on SPY there's a few things we need to break down. The first thing we need to look at is that today did get a bearish rejection at a negatively sloping 5 EMA with a bear trend. But I think the only thing the bulls can hang their hat on today was the fact that volume was not very high for that bearish looking candle. We did not get a lot of volume to back it up, but be careful, volume on its own is not a good enough indicator. It just simply means there was not a lot of panic selling today. The VIX was also only up 0.5%, so we definitely didn't get another huge spike in fear, especially like what we saw on Monday morning. And that is important to note, but as I always tell you, the price does all the talking from here. So understand the volume did drop off even though we did get that rejection. And the critical risk level from here is just simply going to be whether or not SPY can hold 518. If we gap down below 518 tomorrow, there's a very good chance we're coming down towards this 200 daily moving average, which is somewhere right around 500. And of course, we do have this gap down here just below 506. So below 518, there's a good chance we go to at least 506 and then 500. But if we do not gap down below 518, there's also a possibility this was a pullback into a higher low. And as I told you before, if the bulls were going to reach a bottom, they eventually will get a higher low into a higher high. And that is going to be a bounce somewhere off of this zone right around 518. And in that event, we'll need to come break back over 531 and then we'll go close a gap just below 540. So both of these are very valid scenarios. I think the easiest way to trade it is just simply move like water on which one is playing out based on whether or not SPY is above or below 518. Below 518, we go down towards 500 to 506. And above 518, there is still a possibility that was the bottom on Monday. And we're going higher yet again, even if it's just a relief bounce before we continue lower at a later date. So this is a volatile market. It is a day trader's dream to be in this volatile market because you are getting large moves in both directions. So it really should not matter if you're going long or short. If you're a day trader, you should be able to make money in both directions in a volatile market. So you will need to know these risk levels if you're day trading. If you are swing trading, I think you should be focused on Monday's low right around 510 and the 200 daily moving average and gap fill zone between 500 and 506. Long-term swing traders are interested in that level because it's low risk to enter in these zones, meaning even if you lose, it's not going to be large losses. So long-term swing traders are going to do that every single time. And now if you want to stay bearish, I would use the rejection from today's high because if we are getting a pivot lower, we will continue to reject from 531. And then of course the confirmation will be the break of today's low below 518. So below 518, I think it's a very clear risk off market yet again. Keep in mind, we will need to watch Monday's low when we get there. And if we hold above 518, and we start to get buyers, then we're looking for the bullish scenario where we start pushing higher towards 540. So have a very clear plan above or below 518. If you're day trading, I think that is by far the best risk level. If you're swing trading, you have a lot more flexibility on where you want to set your risk, whether you're long or short. And that just depends on how much reward you think you see to the upside or the downside. So 518 is the pivot, higher or lower from there. 531 is the bearish resistance, and we're looking all the way down towards 500 to 506 for the long-term bulls. On the NASDAQ 100 triple Qs, I'm going to give you a very similar analysis as SPY. I want to give you the critical levels for the resistance, the pivot, and the low. And I also want you to pay attention. We also did have decreasing volume on the triple Qs today as well. So even though we did get a rejection, we did not see high volume panic selling just yet, which could be an early indication that the sellers are drying up, which could mean that Monday's low will hold and the low is in. And in that event, we're looking for the higher low, which is likely going to be a retest of this zone between the 200 daily moving average and then this support zone that I have here at 433. And then if the low is in, we will likely start a very bullish push higher towards 456. Now, once we get to 456, once more, I'll remind you, it's possible we continue lower. So it's not like the bear trend has to end there. We still do have a downtrend of lower highs and lower lows. So in the short term, we're only looking for a bounce higher towards between 446 and 456. Now, if the bears take over, we will break down below 431. And you could also use the pivot here at 433. And then from there, it could be a very nasty flush lower towards about 407 to 408. So you have a very clear level here above or below it. For you day traders, you could either use 433 or 431. If the buyers show up, we're looking for a test of the top of the range at 446 and a push to a gap fill at 456. And if the sellers take over control and we lose all of the support, you're looking for Monday's low right around 423. And if that breaks, we will likely get a risk off market yet again, where people sell their long positions before they incur too many losses. And that should be enough to get us down towards 411 to 407. So watch these critical pivots on both SPY and the triple Qs. In volatile markets, I like to narrow my focus on the indices. You could still trade individual stocks, but I think the indices are plenty volatile enough for plenty of moves for traders. I don't think you need to go messing with individual stocks until volatility dries up. We're getting large swings in both directions on SPY and the triple Qs, and both are very liquid markets. So I would focus here if you're day trading or setting up longer term swings. You have very clear risk levels. I don't care if you're shorting or long because there is a ton of volatility. You should be able to do well in both directions. But if you don't typically trade well in both directions, just focus on the direction that you're best at. The reason I say that is because volatile markets can whipsaw you in both directions. So if you're trying to trade in both directions, you could actually lose twice as much. And that could be very painful if you're shorting right when you should be going long and then trying to go long when you should be shorting. It could be very discouraging if you're losing in both directions. So only you know what you're capable of and whether or not you should be trading a volatile market, because the other alternative is that you just sit in cash until this volatility dries up and goes away. And while the VIX is trading above 20, it is going to remain a volatile market. So just be aware of the whipsaws, and volatility does work in both directions. We had a lot of volatility today, and if you were bullish in the morning, you made money. And then if you were bearish in the afternoon, you made money. And that is the definition of a volatile market. So watch these critical pivots and risk levels for both support and resistance and move like water, meaning both of these scenarios to me at this point are a coin flip. Usually when the market is a coin flip, you should just focus on the pivot, and that is the levels that I gave you on SPY and the triple Qs right here, basically where we closed today. Watch very closely if we're above or below that level tomorrow, and do understand there will be whipsaws, which means we could whipsaw above and below that level to shake out traders. So manage your risk very well. Understand volatile markets do chew you up and spit you out if you do not have a plan. So have a plan, be prepared for both scenarios, and then let the price do all the talking around these levels. I'll be giving tons of intraday updates in the Discord server, as well as trade ideas and my technical analysis. So if you want access to all of that, that's in my Discord server, which you can find out how to join in the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.